Alrighty, what's up, guys? Back again on another Monday. It's Bali Trader. Well, actually, it isn't Monday because I just didn't make a video yesterday. But I'm dedicated one video a week at least, bare minimum. So that's what we're doing here. Different format. We're gonna get into Bitcoin and we're gonna get into the euro, which I've grown quite fond of. I think I'm gonna move towards primarily trading the euro because this is my view on Bitcoin right now. I think it's just gonna be there's gonna be a big trend coming up. It's just gonna be really easy to trade. So I'm really looking into getting into other things. But let's just get into Bitcoin right now. Obviously, the weekly chart. This we always talk about this for the past couple of weeks. This 242, 243 level, the weekly order block. I mean, shit, dude, what's going on here? Obviously, we're making higher highs and just pressing into this block, and it's not a bad sign that we might be able to overtake this level. And I think if we are able to overtake this level, then we're going to be looking at at least a completion of a market maker profile into this old order block. This is a level we've talked about before, but bears repeating. On the daily, what are we doing? Double top. Maybe we see some selling coming into the market. People get excited, but I'm more excited about just new highs. Like, see these lows, like just new highs every single week, every single day. Just new highs coming into the market, and we kind of just busted off of this 236 level, which these two red lines, this is our weekly order block. 243, obviously a key level. You can see all the price action here, 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 here. 236, you can see the price action, the wicks, the candles. You can see that these are two very important levels in the market, and it looks like we're looking at 236 to hold, and if it can hold, then we're looking to get above 242. Now, if 236 does break down, then we're going to be looking at these lows, 228, and really don't want to see price break 228. I mean, the very last straw would be these lows here at 225. I would say if price broke 225, we'd be headed to 135. We'd be headed to catastrophic levels. I mean, after all this consolidation, we're looking for a huge move, right? Because after consolidation comes a trend. Right now, what is this? From here to here, Bitcoin's done. I mean, it's 17%, but it's nothing like what we're used to seeing when it can trend. So for the past, I mean, how long is this? 145 bars, so a month and a half. We've really been ranging pretty tightly from 216 to 250. So I would say the boundaries of that range are breaking 243. I mean, if we can consolidate above 243, that's the green light go signal for me. I'm going to be buying any dip after we consolidate above 243, looking for a bare minimum price of 276, but really looking for a price of up to here to this daily order block at 294, just shy of 300. And if we can take out these highs, I'd be looking for one of the 200% extensions, kind of a concept that I've talked about a long time ago. But for every reaction, there's an equal and opposite reaction, right? So if we can, I mean, and this only holds true on like key levels, right? So this 300, if we can break 300, then we're going to be looking for, since 300 is such a key level, we're going to be looking for at least a move of equal magnitude in the opposite direction, kind of just pivoting on this 300 key level, which has clearly been a key level in the past. And yeah, so looking for 400 possibly. I really like 420 because that's where it seems like a lot of action price action is taking place. But yeah, I mean, that's all I have on Bitcoin, to be honest. I am not going to take a position on Bitcoin until we are either consolidating above 243, and then I'm going to be buying dips, looking for big plays like 270 minimum, 290, and 400. And if we break 225, I'm going to be looking for sells, ultimately looking, for the death of Bitcoin. I also think if, we are brewing up for something pretty big, like a lot of Wall Street people are coming into Bitcoin. I got some conspiracy theories on that. But I think if this is going to be bullish, we are going to get a flash crash down first. So I'm just going to free up some cash on BTCE and try to catch some margin calls in the event that, we do something scamish, which wouldn't be surprising in the Bitcoin. That's just the way Bitcoin works. It's just scams every day. So next thing, shouts out to Ronan and Hirajuana. Gonna block those guys out. We're gonna get into the euro, and I can't talk about the euro without getting into the dollar. Alright. So let's just start it off with the DXY, the dollar. We've done a lot of work on this chart, and I'm just gonna remove all this crap. And drawing tools. Remove all drawing tools, and we're just going to get down to the nitty-gritty of what I'm looking at on the dollar. Just to document my thoughts. I mean, I'm not claiming to be an expert or anything, but I have been following some pretty cool people for the past year, and I think I got some good ideas. I think they're starting to rub off on me. So basically, this is the monthly chart that we're looking at, and we see a market maker sell profile, right? Here you go, and ultimately we took out these lows. I guess you could include that. So we got the market maker sell profile on the monthly. The interesting thing about that is that we're looking for institutional levels in the market, institutional price levels, because that's who really moves the market. So in this consolidation zone, really what drove this price up would be this red candle here. This is what you would call a bullish order block, because we'll just extend that out, right? This is a bullish order block because the institutions, they can't simply buy into the market. They have to buy when there's liquidity being offered. They have to buy into selling because they just have such large volume. So, and I mean, since they have such large volume, they're going to be the ones that produce these rapid and very high velocity reactions away from a certain point. No one else can do that. It's really their order flow that's just constantly, relentlessly hitting the books that's driving price up like this. It's not, a couple retail buyers just deciding to buy this all up. It's just, we got 10 billion. We're going to buy here. 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 And that's how, the markets move. So that's how we define an institutional level. There's selling here, taken by the, the institutions, and we can look left, and we really see some uncanny stuff when you see we rally here, boom, violent reaction off of this institutional level, and right when we get up here, boom, we rally off. And it's just pretty uncanny how perfect the body of these candles line up with the body of this candle, and almost with the body of this candle. And so this is the first line of resistance that I'm looking at. Now, if we go down to the week, what we're seeing is, we went right into that identified, area that we would think of as institutional selling, and we failed there. Broke down pretty hard, and now what we're going to do is we're going to identify this candle as a weekly bearish order block, and not much to say after that, I don't think. Then so daily, what we're going to do here is we're going to identify this as a daily order block, bearish. right? So we see that this is a violent move away from this price level. Well, the last green candle is when liquidity is offered for deep pockets to go short. And that's what they do here. And so we can kind of see a bunch of confluence. We see the monthly order block, the weekly order block, and then this daily order block. And I guess, I've talked about this moving average concept before, but not that, the 14-day moving average, it doesn't really matter in the dollar, but it's just to show that how far we're reaching off of this moving average. It's pretty violent. Like, obviously, the market's reaching pretty hard. We're the farthest away from this moving average we've ever been. You see how generally things stay in line, and then, when we start getting too crazy, it's not a good sign. So that's what I'm looking at the dollar. And then we can pull up this chart. This is barchart.com. And what we do is, this is actually the futures contracts on the dollar. And the cool thing about futures is that the commercial entities have to report their position. And this is something that ICT teaches. Basically, anytime that the commercials get too short, that means that they're putting in a top. Yeah, if they they're going to be selling all the way up, and once they reach their maximum short position, the market's going to start to turn in their favor. So you can see right here, here's a maximum short position, and they put in the top. Here's another maximum short position, they put in the top. Here's another maximum short position, they put in the top. And here's another max short position right here, they put in the top. And what ICT teaches is the 1 year extreme net short or net long, and the 5 year extreme net short and net long are pretty key levels. And we are looking at a 5 year extremely net short position on the dollar by the commercials. And, obviously the COT is not a technical analysis tool, and that, we don't want to trade off this, but it is a warning sign perhaps. Obviously you want to be trading in line with the commercials. So they are the shortest they've ever been, probably ever, on the dollar. You can see how pretty extremely short they are. The red line is the commercials, and like this zero line would be neutral or even, and this is the negative. This is like contract short, and then positive would be contracts long. So they're extremely short at this area that we've been defining as resistance, and it's just good to keep in the back of your mind. Something that I'm kind of concerned about. But obviously, as it stands right now, we can go to the 4-hour chart on the dollar, and we can see the market maker buy model. So it seems as if, and then, as you go down on the time frames, you can kind of further hone your results. So this level right here is our day. No, this is our weekly. This zone right here is our daily, and then right here is our 4-hour. And so we see this market maker profile on the 4-hour, which is either going to, we've got some room to reach, is what I'm saying, I guess. How far we can reach is just a question of, are we going to take out these highs, or are we going to just reach up into some kind of order block, some kind of resistance, and trade softer from there? So basically what I'm doing is I'm just defining resistance. I think that the dollar has room to reach up, and I think that it will reach up in the near term, the next couple of days. And then what we're going to do is we're just going to observe what happens at these levels. If price were to hit this level and then trade violently off of it and break market structure, then we would have a reason to go short. And if we just blow through it then we would have a reason to expect maybe we're headed up here, maybe even taking out these highs. That's the dollar outlook. The euro, USD. So yeah, I mean, we study the dollar because 58% of the dollar index is keyed off of the euro. So if we know what the euro is doing, they're pretty inversely correlated. Actually, I mean, yeah, they're like exactly correlated. So if the dollar's going up, the euro's going down. So that's why it's good to know that people are shorting the dollar because they're probably long the euro. So we can check that out. We can go to bar chart. We can select our euro commodity, the June 15 contracts, probably just the most recent contracts. See what people are doing. We click on this little chart snapshot thing. We go to weekly nearest. Weekly nearest. And we just, look at all the data we can. We go add study. We want to go to commitment of traders line chart. And we probably want a candlestick just to make it look prettier. And then we draw the chart. And yeah. So, I mean, commercials are the longest they've ever been on the euro in 5 years. You can see last time they were this long, what happened? It was a long-term low in the market. And now we are back here once again. And, you can see this purple line is open interest. And we can see the open interest has rapidly declined, which means that short contracts have closed. And if commercial entities are not interested in being shorters anymore, that probably means they expect price to rise. So this is interesting. I didn't know about this. So let's get back into the euro. I drew a bunch of levels on here, so just like I did on the on the dollar, we're starting out on the monthly, and basically we see this market maker buy profile where they take it down. You can see the consolidation, ultimately, boom, blast it up, take out this high. So they bought here, and the thing is, they were selling around this area. Let's see. I guess right here. So this candle is where the selling occurred right before price blasted down. And, this isn't going to be exact. I should make it exact. Boom. So, boom, they were sellers here, and then they turned buyers here. And, price never looked back, and now we're back here again. And, that's just the monthly chart. Cool thing about the euro is on the monthly chart, we are in the sweet spot. 70.5% ICT sweet spot. We just wicked off that. Didn't spend much time there. That's something to keep in mind. Then we're going to move to the weekly. Weekly. So I should probably just remove all this stuff because I don't know what it is anymore. Drawing tools. Remove all drawing tools. But, just like the dollar, it's very correlated. So we have this red candle prior to a huge move up. We have the order block that is a very bullish order block because, right, smart money is going to be buying into selling, move it up, retraces back in, they're buying here, and then we see this reaction. And so we do have a little ways to go before we reach that order block, so we're just going to keep on keying in, getting more in depth, and if this kind of looks exactly like the dollar, it's just proof that they're pretty correlated, right? So here's the daily bearish order block. On the dollar, we had the bullish order block. Now this is going to be a bearish order block because they're pretty much the opposite. And we're going to a 4 hour. And we can see, here's an order block, boom. And you can see how price kind of worked there, failed. Where is it going to reach to? It's going to reach to the next order block. And so we're going to be observing what happens there. I would say that this order block is not going to hold because on the higher time frame there's already a pull, you know, towards this level. And you know, we have some an order block here and an inefficient move here. So an illiquid move that probably needs to fill up. And this is kind of like, probably needs to dip into this consolidation. And so, you know, watching what price does here, if it fails here, it's probably going to move down to here and kind of reach into this daily order block. And that's if the euro is even going to go up more. It might just, you know, go down even more, take out these lows. And I'm less inclined to think that's going to happen given how long commercials are on the dollar or on the euro. So really we're just looking for retracements to buy the euro. But that's pretty much how I feel. And then good profit targets on the euro would be this order block in the near term, because I mean, this is just a basic pattern, but it's you know, it's tried and tested. I mean, there is symmetry in the market, and this is one thing that I believe in. The whatever ABC equals CD, you know, just in one leg down, and then you get an equal leg down, and it reaches nicely for the daily order block that we've mapped out. And whenever you get one of these kind of measured moves, then in this consolidation, you know that there is a strong interest in a strong like institutional interest in selling. So you see this order block and you see the big move down, you know that someone with really big pockets was interested in selling here. So if price is going to reach here into a bullish order block on the daily chart, you have to suspect that if price were to reach up here again, that it would be a profit target taking level going into the future. And also, if price were to react up to this daily order block, there's a lot of illiquid moves here that would need to be filled. So we'd probably just do a market maker profile and fill into here. And then, you know, who knows from there. We'd probably react here, but maybe go higher. But that is my, yeah, I mean, that's my outlook on everything. Bitcoin and the euro, man, I'm thinking Bitcoin and euros are cool. And that is my analysis for this week. I hope y'all liked it, and you know, subscribe, like it. Until next time, good luck, good trading, and peace out.